Hello, everyone. My name is Glenn Gao. I'm the marketing partner for Clear Ventures. Let me start with a few questions about the audience. How many of you here are working on or considering working on a blockchain project? All right, pretty good, maybe half. How many of you here have invested in or are considering investing in blockchain companies or cryptocurrencies? All right, great. Great, so I'm going to try to cover some topics for you today. Hopefully you will learn something in either category. My role at Clear Ventures, one of my charters, is to focus on the blockchain space. It's incredibly interesting to us as investors, and I want to share with you some of the things we're learning. Where is that clicker? Let's see if we can get this to work. That doesn't look like it. What's that? It works. Oh, what did I do? OK. All right, so let's first talk about ICOs replacing IPOs. That's a question a lot of people bring to us. Are ICOs actually replacing ICOs? And in fact, they're not, because an ICO is a fundraising element. And typically, startup companies need to raise multiple rounds of financing. An ICO is a perfectly good way, if you do things right, to raise money. And you can do an ICO, and at some point in the future, you can do an IPO. They're not mutually exclusive. So that's the first point, is that they can be very legitimate ways of raising money. And they're not replacing traditional financing, they're enhancing traditional financing. Okay. In fact, if we take a look at what happened in 2017, there's $5.6 billion raised through ICOs. So it's a very nice chart showing us how it increased rather significantly during 2017. That number is going to continue to grow in 2018. If we look at this chart just a little more closely, I'm sorry, but I don't have this quite figured out. The green button. There we go. This is the chart a little more closely. We can see how, in fact, the amount of dollars in ICOs is about the same, but the number of ICOs is dropping. This is something that Jay mentioned earlier. This represents the number of ICOs that are actually closing in each month. This is associated with regulation, and it's associated with quality, which I'm going to talk about. This is a good change that we're seeing happen. So the first reason VCs love ICOs is that equity and token investments are not mutually exclusive. They go together. So it's not true, as Jay mentioned earlier, that the venture capital industry is going to be disintermediated. The venture capital industry will participate alongside of ICOs. So let's look at some examples. Kik, I think somebody in the room actually invested in Kik. I saw that somewhere. Is a Canadian company that's 7 years old. It's a unicorn. They raised about $120 million in venture financing. Now, what I really think happened behind the scenes with Kik is Snap was kicking their butt because they compete with Snap. Snap went public. Kik was not doing very well, but they changed their business model. They said, we have this thing on the network that is kind of like likes on Facebook. Why don't we turn those into tokens? And now we can sell those tokens. It's actually a brilliant move on their part. And they raised $100 million in an ICO. So I find this fascinating because it's a 7-year-old company that did this. So it opens up a whole new avenue of thinking about how to raise money. Let's also look at SAPS. So I have the definition here, a simple agreement for future tokens. We as venture capitalists and accredited investors can invest in SAPS. These are futures contracts that say that a token is going to be worth something someday, and you can buy into it now. So it's different from an ICO, and it's different from an equity investment. And it's available as another fundraising mechanism. The most famous one, and I believe it was the first one, is Protocol Labs. They issued a token, or almost issued a token, called Filecoin. But they sold SAPS. They raised $257 million. So to date, it is the largest US-based ICO that was completed. $257 million. All of it was through SAPS, which means that they haven't actually released the tokens yet. They just let you buy into a promise to buy the tokens some point in the future. Very interesting financial engineering. This slide's a little bit hard to read, but I just talked about Filecoin, and the small bar next to the large bar is Filecoin. Remember I said Filecoin was the largest US-based ICO that's ever happened. The one next to it is Telegram. Many people have mentioned Telegram. Telegram's an amazing story because their pre-sale raised $850 million. They haven't even completed their ICO yet. They will raise well over $1 billion, some say up to $2 billion in an ICO. And venture capitalists are in early on that deal. They are buying into the tokens themselves. So the venture industry is shifting over to help companies get off the ground and participate through participation in ICOs directly. So another reason why we love ICOs is that the data show ICOs perform better with venture capital involvement. Here's information from CB Insights, and what this points out is that the larger ICOs have more venture capital participation in them. So we can't prove cause and effect, but it looks to be that a more successful ICO is more likely to happen if you have venture participation early. Let's think about what happens when you don't have venture participation early. So these statistics came out just a couple weeks ago. And what they're saying is somewhere between 50 and 60% of ICOs have completely failed. Now, you don't read about these. You read about the highly successful ones, of which there are a handful. Most ICOs fail out of the gates, or they fail quickly thereafter. So it's something to keep in mind if you're going to invest in or run an ICO. Why does this happen? One of the reasons is fraud. So I hope nobody in this room ever invested in an ICO called OneCoin, because OneCoin was a pure Ponzi scheme. It was designed to have more money, for more people to put money in at the bottom so the people at the top could take the money out. The founders immediately took the money from the ICO and disappeared. So pure fraud exists. Another interesting statistic is that the typical startup failure rate in the first year is 25%. ICOs are around 50%. So we have to ask ourselves, what's going on? Why is that the company not taking off the way we thought it would? There are a few reasons for this. I'll back up. A few reasons for this. Some ICOs fail because they really don't have a strong team. Some because they have taken on a project that's way too ambitious. And others because they really don't know how to raise funding. And so they disappear quickly. Now, what's interesting about disappearing quickly is that if you participate in that ICO, it's your money that's disappearing quickly. I don't like that. Another factor with ICOs. Now, this is just a tweet. I can't verify these numbers, but I do believe these numbers to be true, which is if you perform a successful ICO, what happens is you've raised some money, but you're also holding tokens. As the company, you invariably hold tokens that have value. But those tokens, in 40 to 50% of the cases, are below what you initially offered them at. And so that's not a very successful ICO unless you took all the money out the minute it peaked, and it's very hard to choose the peak. So even if you did ICO, it may not be very successful relative to how much money you were hoping to take out of it. I'm sure everybody in the room has heard of Ripple, and Brad Garlinghouse is the CEO of Ripple. I found this a fascinating commentary that even if you raise a lot of money in an ICO, you've got to set aside a lot of it for attorneys. It's, somebody just mentioned 23 attorneys he had to meet with. That's maybe not the, it doesn't matter the number of attorneys, it matters how much they charge, right? So Brad, who's extremely successful, has raised an enormous amount of money through Ripple, is saying most of his money is going to his attorneys. So think about that as the, if you're going to run an ICO, think about what are you going to do with those funds and how much have you actually set aside to work with your attorneys. Okay, now, regulation drives quality, and VCs want quality, and any of you who are making an investment want quality. So let's talk about how that happens. So we had our esteemed colleague from the SEC talk to us earlier, but it's not just the SEC you need to be paying attention to. There's something called the Financial Crimes Enforcement Network that has come out and said, hey, we're really concerned about financial crimes, so money laundering. The Commodity Futures Trading Commission set out, you know, we think we need to regulate this stuff. And just recently, the FTC is going after ICOs, particular ICOs. They've decided they've violated something in the regulations, and they're going after them. So as a person involved in ICOs, you need to be highly cognizant of all the federal regulations that exist, and there are a lot of them. And here's what makes it really tough, and here's why you wind up spending a lot of money on attorneys, is that these regulatory bodies don't necessarily agree with each other. You mentioned this earlier. One of my favorite stories is Arise Bank, and the SEC shut them down. And thank God they did. Arise Bank ran an ICO. It was a complete fraud. So imagine you're going to run an ICO, and you're thinking maybe there are regulatory organizations that are looking at you. Well, what the SEC did, and I approve of this, is they froze the accounts, not only of the company, but of the individuals who were the founders of the company, and said, you can't touch any of that. And by the way, I won't be surprised if those founders go back to jail where they originally came from. And the SEC has issued, we don't know how many, it's kind of a secret number, but lots of subpoenas. And let me just share with you, as nice as you are from the SEC, you probably, as an individual in this room, don't want to receive a subpoena. That usually means you're going to lose. So they're investigating, and the regulatory bodies want to see what's happening here, but ultimately they're trying to protect the investor. They're trying to do really good for the American investor. And a lot of ICOs have played with those rules and have probably broken them. So next, we as investors are seeing better quality deals. That's good for everyone in the room, whether you want to create an ICO or you want to invest in an ICO. Quality is always better as it relates to starting a company and running a company. So everybody in the room knows blockchain is big. That's why we're here. This is my favorite quote out of all the ones I've heard. It's from a study that Goldman Sachs did. And Goldman Sachs was looking at what's happening in the financial markets and how is blockchain going to impact the financial markets. And they came back and said, blockchain is going to affect everything. It's not just the financial markets. It's industry after industry after industry that's going to be impacted. And so we remain very, very excited about what's happening. In fact, this slide's a little bit hard to read, so I'll explain it. The tall bar represents the amount of venture capital funding that went into blockchain companies in 2017. So 2017 was a record year for blockchain company investments from venture capitalists. The smaller bar to the right represents the amount of venture capital financing that went into blockchain companies in January and February of this year. So we're going to blow away the investments that we did in 2017 as investors. There's a lot of money going into blockchain companies, a lot of opportunity going into blockchain companies, and the fact that the quality is improving is good for everyone participating. Interestingly enough, some companies are saying, guess what? We are issuing a security. We're not going to try to play this game and call it a utility token just because we want to call it a utility token, but we're going to acknowledge that we're actually issuing a security, and we're going to follow the rule of the law, and we're going to file with the SEC, and we're going to follow the regulations they provide to us. This is a breakthrough, a very positive breakthrough. I hope we see more companies doing this. And we're going to see whether or not the SAFT really works. It's kind of a gray area contract. We think it works because it's primarily accredited investors who can, well, it's only accredited investors who can participate in the SAFT. And more often than not, the SEC gives more leeway in that area. What the SEC is concerned about is protecting the retail investor more so than the accredited investor. And a SAFT is more about the accredited investor. So we're hoping that the SAFT will survive regulatory scrutiny and continue to be a vehicle for investing. Another way to think about raising money in ICO is to raise it outside the US. So let's say you have a company in San Francisco. You set up a subsidiary, and I use the example of Singapore here, and you do the fundraising out of that subsidiary in Singapore, and most importantly, you don't enable a US citizen to participate. So there are 192 countries in the world. We subtract the United States, and we have 191 other countries we can raise money in, as long as we're following their regulations. But I see this I expect that I will see this happening more and more, because the regulations might be a little easier to get around in a country like Singapore, and so we'll see a flight to fundraising in those countries. The last reason VCs love ICOs is now there are more paths to success. Our job is to take the money from our limited partners, invest it so we can give them more back. That's anybody's charter if you're investing money. You want to get more than you put in. So we have more ways to win now. So without ICOs, more or less, we put money into companies in equity, and that company, when they're successful, either has an IPO, and we can cash out, or they have an acquisition, and we can cash out. With ICOs, we have a lot more ways to be successful. We can put money into a SAFT, and that company gets acquired or then does an ICO, or we can actually put money into the tokens themselves, and that company can get acquired or do an ICO, and we can cash out. So it's a very exciting time we have as investors, and all of you who might participate in creating a company that wants to do an ICO. There's a lot more win-win that exists today than has existed in the past. So the last point I want to make is whether or not you decide to get venture money, you should get smart money. So some of the early ICOs received a lot of money only from speculators, people who were putting money in because there was a belief that money is going to be worth more in a short period of time, and in fact, I can get out really quickly. And that's okay, except that more often than not, you need to raise more than once. So if you think about why a lot of these ICO companies are not succeeding, it's because they're taking on a big project, they need a lot of money, and they need to hire a lot of people, and they have to raise money again. Well, one of our jobs as venture capitalists is to ensure that a company hits its milestones and can raise money again. Part of our job is to help them reach those milestones by giving them pointing out the talent that they need, helping them find customers, giving them the advice they need to succeed. So it's completely up to you how you want to choose to raise money, but I highly recommend you use smart money, money that understands that this process of raising money through an ICO is a step along a long journey to be a successful company. So I encourage any of you here in the room, if you'd like to connect with me, the best way is through LinkedIn. I enjoy receiving LinkedIn connections and communicating with people. If you have any questions for me, I will do my best to answer them, although I won't respond very quickly because I'm going on vacation next week and I'm not going to be looking at LinkedIn next week. So let me open up the floor for questions. I'll do my best to repeat the question if somebody asks me something. Well, okay, so the question was, it's actually a SAFT that I was referring to. Could you raise money with a SAFT and then go to Singapore? Well, you could, except the SAFT is being raised in the United States, right? And therefore, it's under regulation of United States regulators. So you do have to live in the regulatory environment if you're going to use a SAFT within the US. The only way around that is to not enable US investors to participate.
No, I was saying first you do a SAFT here.
You could.
And then you do a separate ICO there.
You could do a SAFT here,
Yeah.
and you could do an ICO elsewhere, but you're still living under the regulatory environment of the United States because there are US investors. Yes, next question. Yes? Yes, okay. So what is the value of us? Why would we put equity into a company that's going to do an ICO? Because we believe in the value of the company, ultimately, and we look at the ICO as a fundraising mechanism to help the company be successful, and because we will participate in the pre-sale at a discount because we are investors in that company. So we'll have both. So some of these companies don't have, I think you said, an expectation of profits. We would not invest in that kind of company, right? So we wouldn't look at that as a good investment for us, and probably wouldn't invest in the ICO either. Yes? If you've done an ICO, what's next? Is there an exit from there? Well, think about it this way. So let's use Kik as an example. So Kik raised $100 million, but they also did something that blows my mind. They set aside somewhere in the range of 60% of the tokens for themselves. Okay, so think about that. They just received $100 million in something that's tradable, maybe Ether, okay? And they could cash that out very quickly. And then they have these Kik tokens that are worth something. I don't know what they're worth, but they're probably worth $600 million. So now the question is, how liquid is that Kik token? Are the exchanges picking up my Kik token? Are people buying my Kik token? Or am I holding on to something that no one wants to buy? So there's a liquidity question. And that's a big ICO. If you think about a small ICO, you have a challenge, which is I need to be picked up by exchanges, and I need to find people who want to buy the token that I'm holding. Not an easy proposition, especially if all I did was write a good white paper. I need to prove myself in order to make that successful. Yes?
What do you think about the companies raising money with traditional methods, not doing an ICO, but utilizing blockchain technology? How valuable are these companies in your eye?
I didn't quite...
Traditional money raising for blockchain technology,
sure,
but not touching ICO aspects.
So what do I think about traditional fundraising for a blockchain company without an ICO?
Correct.
Absolutely feasible. An ICO, again, is a mechanism. And so, for example, if I believe that my token, no matter what I think, is ultimately going to be viewed by the regulatory bodies as a security, and I don't want to be involved in security regulation, I don't have to sell the tokens themselves. I can still use tokens on a network, or I can use a blockchain without tokens, and I can create a highly successful company that has nothing to do with ICOs that's fundamentally based on the blockchain. I think I had a question here.
Yeah, our company is VC funded, but now we're doing ICO. And some other VCs are very, very enthusiastic, right? Because our current VC shareholder are not into this. They cannot invest into like tokens, things like that. So then, you know, right now we're in the middle, you know, because the current shareholders don't get anything from the ICO, right? So how do we allocate all the
So I think you're sharing with me an example where your initial investors are actually restricted based on the agreements they have in participating in your ICO. So that's unfortunate. They're stuck at this moment. However, if you're the CEO, what I would say to them is the ICO is just one step along a long pathway to our ultimate success. We're going to use this as a fundraising mechanism, and it's going to increase the value of the company and therefore the value of your shares, and ultimately we want to go public. Yes?
Here's a mic here.
Oh, he wins. He has the mic.
I have a quick question. What countries do you think are best suited for ICOs currently?
What countries do I think are best suited for ICOs country? It seems to change pretty quickly. I've heard of Caribbean islands that are good places to go, seriously, and Singapore. I don't know how to answer your question better than that. So for example, I'll keep going back to Kik. Kik, very successful, but the Canadian government said, you can't raise money in Canada from Canadian citizens. And they said, we don't care. So there are a lot of options. There are a lot of options. And each country is going to do this differently. Like, if you've noticed, the state of Wyoming is saying, hey, we're a friendly place, but you actually don't want to just limit yourself to the state of Wyoming. But if you find countries that are welcoming, like Switzerland is another good example, or trying to create a business around enabling ICOs. One more question, yes?
Yes, thank you. And it's hard to imagine why VCs would really want to buy just pure tokens with no voting rights. Maybe you could elaborate what makes that a token that's really worth taking that risk in a VC's mind?
Okay, so this question is, why would a VC really buy a token?
Yeah, without voting rights and
Sure.
without a lot of the normal protections. What would it have
Sure.
to have?
So a token in and of itself compared to a share isn't a good investment, purely, right? Because I have no control of the company. Typically, I'm trying to buy some control of the company and help it be successful. With a token, I really don't have any control. So the reason I would buy into an investment with a token, into a company with a token investment, is, first of all, I believe that this company is worth a lot of money, and the token I'm going to get is worth a lot less than it's ultimately going to be sold for, and I see that value. And that's exactly what's happening with Telegram. So the early investors, trust me, are paid a lot less than anybody else is going to pay. And so immediately, within a matter of weeks, their investment has increased by 2 or 3x. And sometimes they're not even locked out, and they can sell it right away. And in fact, there's already a secondary market for Telegram's tokens.
If I could follow it up, it's almost like having a warrant if they make the right arrangement early.
It's almost like having a warrant. That's right. And it's the getting in early that's the secret.
Great. Let's give Glenn a round of applause for a great presentation. Thank you, Glenn.